All right, my favorite brick and mortar stocks. This is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance for updates, etc. So recently, we've seen Jcpenney going bankrupt. We've seen store closures across the nation, from retailers to other brick and mortar stores, etc. It's been pretty tragic all over the board. But also, we've just have companies that are competing, and everything's been slowly moving to online. And Amazon pretty much take over everything. Malls are closing, etc. However, there have been some brick and mortar stocks that have been exceeding. And here we have a Jcpenney. The graph's down about 80%. Just filed for bankruptcy, so it's not doing too hot. They're probably going to go out of business. And this is not an unusual thing. This is along with a lot of other retail stocks as well. But there is three stocks that I've found here that I'm going to talk about today, which I have found to be my personal favorites, brick and mortar stocks that I think will continue to do well, that will outperform the market, and that are performing, fairly well during the current situation we're in, and will continue to adapt and change. And I think they're pretty solid companies. So let's go ahead and get into the first one here, which is Starbucks. So Starbucks, its ticker symbol is SUB or SBUX. I think it's currently undervalued due to the Rona hit. It's adapting to the marketplace constantly. It has non-franchise locations, which is very unique compared to other retailers. You see McDonald's, you see other fast food places, you also see other even coffee shops, which are significantly more franchised than even Dutch Bros, I believe, is franchised as well. But Starbucks actually maintains complete ownership over all of its locations, which gives it complete control for a company. And so for a public company, it's very nice to see that it has this type of control and can still operate with the level it's doing without franchising. So again, non-franchise locations. And a big thing that I like about Starbucks, this is my favorite thing about them, is new product lines and services. Recently, they have a lot of cold brew stuff going on. They have a lot of almond milk, coconut, oat milk, all these alternative milks that they're using for their different drinks, and a lot of in stores. So in grocery stores, I've been seeing Starbucks canned espresso drinks, frappes/lattes in those glass bottles, and I've been drinking a lot of that. Actually, I really like it. It's awesome just to go buy like a big jug of it and just have it as my cold coffee in the morning. It's obviously not very good for me probably, but hey, it tastes really good. And I think they're doing a really strong job just kind of adapting. And I think that's going to, help them during this current pandemic, since people are still shopping at stores and stuff, but may not be going, they can't go inside Starbucks right now, etc. So that's nice. It still has a massive cult-like following around Starbucks, even though a lot of people have been, switching to maybe healthier options, trying to save money. It's still massive. I mean, you're seeing massive lines at the drive-thrus currently for Starbucks. It's almost always packed whenever I, would walk into a Starbucks, or I don't go to Starbucks that much anymore, but when I do, it's almost always full, at least the ones around my place. And they can afford to lower prices and beat competition. They're so large that now if some, new coffee shop wanted to pop up, they can simply lower all their prices, outprice them, and beat their competition, They also, and that because they have, 30,000 plus retail stores, this massive widespread retail stores, which is all owned by Starbucks themselves. And so recently, in 5 years, they're up around 44%. So they've grown pretty significantly with a dividend yield of 2.21%, which makes it a pretty decent dividend stock. Its 52-week high is around $100, 52-week low around $50. And its market cap is around $80 billion. Now, I currently think Starbucks is going to be worth a lot more than $80 billion in the future. And I think this is a great growth stock. It's not going to be you're not going to make 200% in a year on the stock, or you probably won't double your money in a single year on the stock. But it's going to grow slowly. I think Starbucks is going to stick around. It's definitely going to make it through this whole pandemic situation. And we saw as well, and here's the price today. It's around $74 a share. So overall, I think Starbucks is a great stock in terms of brick and mortar retailers. But next up, or I guess this isn't a retailer, but it's a brick and mortar store. And so the next one that I want to get into, which is, first off, I got to read through this. This is a really interesting article that I found about Starbucks before we get into the next stock here. So Starbucks Global Prospects, and this is just about competition going forward and how Starbucks is beating the competition. And this mainly has to do with Luckin Coffee, their accounting scandal. Luckin Coffee was coming up as a Chinese company with this huge it was a pretty big following behind it, and it was really starting to take over a little bit and be a big competitive threat to Starbucks, especially in China. But they have some serious accounting scandals going on. I think there was the CEO and their COO, both were fired as a result. A lot of legal issues going on, which has I think really boosted Starbucks is really going to hurt Lupton Coffee and the growth that they were experiencing. I think it's going to put that on pause, especially having that happen during the pandemic. On top of this, the valuation's looking good. And this is an article from the Motley Fool that I think is just really describes it very well around Starbucks. You can read this yourself. I'll try to put a link to it in the description below. But it trades at roughly 25 times their 2019 Rona earnings. And it's currently selling for under 8 times their combined 2019 dividend plus buyback. These modest multiples become sea-grabbingly compelling when considering 7% growth that same year, roughly twice the S&P 500. So it's outgrowing the S&P 500, which is great to see. And again, the sales premium, the fact that they can, lower the price of their goods to beat competition pretty much whenever they want just because of how large they are now. And we've seen that with other companies too, like Coca-Cola and Pepsi, who've done that, who just price gouge their competition. Whenever a new competitor pops up, they just price gouge them. No one can compete. And that's just what Starbucks is doing as well. And it's a really smart move by them to, lower competition there. So anyways, you can read through this if you want, but Starbucks has been recovering. They're doing drive-thrus, and the lines have just been massive. But I want to get into the next one, which is Home Depot. And this is a stock that I've really been following recently. And, I really like Home Depot as a stock for many reasons. Number one, it's always going to be needed in some form. It's really hard for Amazon to replace Home Depot or any online, marketplace, for example, because you need, people who, for example, construction workers or laborers or contractors, when they need a part or they need a tool or something, they need to go straight to the store and they need to grab it and they need to get back to their job site. They don't have time to wait a few days before ordering it. There's a lot of same-day stuff going on. They're doing online store and pickup, and the pickup works pretty well. I tried it out. Their online store is pretty decent as well, which will help compete against Amazon for some things. It's been thriving during quarantine, especially in my area. Home Depot is almost always packed. Same with Lowe's. More people are trapped inside, which I'm guessing means people are, doing more home improvement projects, working on their yard, fixing up their house, and also construction is taking place still. Construction's an essential business. It's been deemed that. And we're seeing lots of construction now, especially since schools aren't in session. They have time to go and work on all the schools, work on public property. Since there aren't as many people, they can get a lot more done. So we're seeing a lot of construction taking place, which is going to boost Home Depot's revenue. We're going to see it's a profitable and stable company. Again, it's not Amazon replaceable. It's hard for Amazon to be as on demand as Home Depot is. You can have same day delivery, but it's going to be really difficult if someone needs to get it right that minute. If they're in the middle of a job, you need to go grab a part, you're running to Home Depot, grabbing it, booking it back to your job. It's pretty impossible to do that currently with online delivery. It's a steady growth stock, up over 25% year over year. We're going to see that in a second here. So during the coronavirus, which I used that a date about February 14th, which was right before it just took a massive dump, the entire market. It went down almost 40%, but as you can tell, it has since recovered significantly, almost back to the same price that it was pre-pandemic, which is pretty incredible. It offers a dividend of 2.51%. It's a very large cap company at over $250 billion. 52-week low of 140, 52-week high of 247. So it's still below its 52-week high. I think the earnings for Home Depot that are coming up are going to be very surprising, and I think Home Depot is going to outperform this year, especially compared to other retailers right now. And this is kind of some of its balance sheets to show its growth. Its EPS have grown pretty significantly. Seeing its net income grow every single year here. You can just kind of take a look at this if you want. I'm not going to explain too much since I've already talked about a lot of this. But, it's just a really growing, steady company. And I don't know necessarily if you would call it this incredible, undervalued unicorn company. It's not that at all. It's a very stable company. But I think it has a lot of room to grow. It's going to continue to grow. And especially now that a lot of its competitors have been wiped out. And a lot of people, again, are staying home, focusing on home improvements. I think that a lot of people who are losing jobs are going to go towards jobs, in contracting, doing work like that, since that's still highly in demand, especially in construction. That's only going to help Home Depot out. And again, it's just Amazon resistant. That's one of the biggest things about Home Depot. It's been very successful with that. And here's the sales, that's revenue growth. So as you can tell in 2020, about 2% so far. We see 7% growth and 6% and 6% again. So it's really steady growth, all, about 7%. And I expect 2020 to be fairly similar, probably a little less, but we'll see what happens there. So anyways, next one is Costco. You may have seen this one coming, maybe not, but Costco is a really interesting stock. Number one, because it's essentially just a big grocery store, a huge warehouse. That's all it really is. But one thing that's interesting about Costco is how they operate, how they really make their money, which I think is super interesting. So it's a very solid, very stable company. It's not Amazon replaceable at all. Just the amount and quantity of what they do and the way they're set up isn't how Amazon operates whatsoever. Amazon might replace a clothing store because it can just sell the same clothes online for cheaper and then just mail them out, or just small products like that. But Costco, which does very bulk items, it's going to be much more expensive to ship those items than to sell on Amazon. So Costco is a very unique position here in competing against Amazon. I'd actually argue that Amazon really isn't its competition. If anything, it's probably Walmart or companies like that that are trying to get into the same space as Costco in terms of a warehouse space. So the most interesting thing about Costco is its unique membership service. Joining costs $60 annually per household for the simplest membership and $120 for the premium card. For business members, additional cards cost $60 each. So they have this recurring revenue service on top of people purchasing products. This is pretty incredible. You're having people go in, you're making a low, and this is why they can offer such low prices, by the way, especially with gas that they offer and just products all around the board. They can price gouge everybody because they have this subscription service, which tons of people have now. So on top of them making a little bit of money from all the products in their store, they're also making a bunch of money from this recurring revenue service. And when people shop at Costco, they tend to spend a lot of money, as you may have experienced doing. When you go to Costco, you're not just spending $10 to get a candy bar. You're spending probably hundreds of dollars. Usually, almost every time, you're spending at least $100 at Costco to buy a bunch of groceries. And so they're making a lot of money on this huge quantity of goods that's coming in and going through their stores, as well as this recurring revenue. Again, it's Rona resistant. The stock actually only decreased about 11% after the initial drop. We'll take a look at the stock graph in a second here. And it's a very, kind of slow growth stock. It was up 20% as of 2019, but it's a small dividend of about 0.94%. I just think it's a very stable company. It's a really large company, and I actually think it's going to continue to grow, and people are going to see it as perhaps slightly undervalued right now in comparing to other retailers, especially when comparing it to a company like Amazon. It's still adding a ton of new members, and people really like this bulk order service. I think it's really going to be one of the last remaining big shopping centers, as Amazon means to replace a lot of these big grocery stores, etc. But we'll see what happens there. Anyways, so the membership income, again, it increased 6.3% year over year to $816 million. So they're doing it nearly $1 billion in just membership income only. And that was in Q2. Just in one quarter, they increased to $1 billion in revenue just in membership income. That's not including all the other revenue that they're getting from purchased goods, etc. And they grew their membership count to about 600,000 households during quarter two, which all came from existing stores. On top of this, Costco has a lot of area to expand. It's really popular in the U.S., doesn't really operate much anywhere else. I'm going to have to look into that a little bit because I'm not 100% sure on their locations, but I believe they're really just U.S. central right now. I know that for a fact. And so as they continue to expand their stores, they continue to get more members. I mean, a 6.3% year over year, is pretty incredible growth there. And, growing membership by 600,000 households. That's so many households to grow your membership. And we're going to see that continue to grow as, a lot of these new families, a lot of millennials, are starting families now, etc. So we're going to see a lot of them start to get Costco memberships because we're going to need these bulk orders. And especially, after this pandemic here, and even during it, when people are trying to stock up, Costco's the place to go. So we're going to have this kind of fear-mongering and wave of people who need to stock up for goods, who are, people are going to be afraid of the next, pandemic that's going to hit. They're going to want to stock up on goods, and Costco is really the place to go to get a large quantity of goods. And to do that, you need a membership. So they're going to start paying for that membership, and they're going to go back multiple times. So they really are in a great position, Costco is. Here's just a look at its stock graph. And don't pay attention to the graphs too much, guys. You really just want to pay attention to the financials. I know I'm showing you them, but I'm just showing you them to give a quick example of the price that it's currently at, as well as some other basic information. But you really want to do your research based on what the company offers, what the future value of the company may be. Is it currently undervalued? And I currently think every single one of the companies I've talked about here, Starbucks, Home Depot, and Costco, has a lot of room to grow in the future. Especially Starbucks right now, since it was hit so hard by the pandemic, and it's going to come back and it's going to keep growing, and it'll probably grow substantially past where it was before. I think Home Depot is going to steadily grow as well. It's done very well. And I think Costco as well. I've talked about all three of these. The one thing they all have in common is that they're all, stable, large companies. They're all growth companies. And they all are positioned in a way to compete and, survive, any revolution that Amazon's going to try and do. It's going to be, Amazon's not going to replace a coffee shop. It's going to be really difficult for them to replace Home Depot or Costco as well. So the online revolution, all three of these companies are very safe from that. Especially, it's more focused for Costco and Home Depot. So its dividend, again, is 0.94%, very small dividend, nothing like Home Depot and Starbucks, which offers a little over 2%, a very nice dividend, or about an average one. $130 billion market cap. Personally, I think Costco is worth more than $130 billion. Let's go back and look at Home Depot here. $250 billion market cap. Home Depot has a $250 billion market cap, and it doesn't have the same recurring revenue service and this growth that Costco is experiencing. I think Costco is looking a little undervalued here, and it's not, growing substantially like Home Depot is, but I think Costco does have room to grow, and we're going to see it grow. And it's, like I've said, growing a lot, but it's, all these companies are growth companies. So again, it's 52-week low, $233, 52-week high, $325, and there you go. Significantly below, or a decent amount below its 52-week high there. And I'm sure it'll continue to grow and past that 52-week high as the economy recovers. So, again, one thing I do want to touch on is the coronavirus. When it first hit around February 14th, it dropped around 12%. So I guess it was a little after February 14th. That's just a benchmark date I've been using to measure companies, percentage drop there. So around 12% is pretty much nothing compared to a lot of retail stores, which took massive hits, even with bankrupt. Costco's done very well there, being a very stable company. And it's grown, only about 6% recovery there, but it's pretty close to the price that it was before, not too far off, a little under though still. And over a year, we've seen 20% growth, so less than Home Depot. And again, it's going to be a slower growth company, but I do think it is, in my opinion, a company that has a lot of value, a lot of potential, and will continue to grow in the future. All right, anyways, guys, this is StockerFinance. Make sure to check out some of these videos as well, and I will see you guys in the next video. We're going to have some really good, juicy videos coming this week. I just wanted to get this one out there as a quick, come back to our roots here and focus on stocks. I know I've been getting a little off track there. But we're going to have some great videos coming this week, so make sure to subscribe and hit that bell notification. It really helps. And I'll see you guys in the next video. Peace out.